Good afternoon, latties. How we doing? I know I say this all the time, but this time I really mean it because I'm so fucking exhausted. It's been a long day, but it's been a great day. I don't know how long this video is going to be, but I'm going to try to keep it short and sweet, just for my own well-being because I'm so tired. I don't know what the title of the video is going to be, but I'm sure it's going to attract a particular flavor / profile of individual. And all I have to say is nothing, because this shit's fun. I call shit out, it happens, and then people get angry in the comments saying, oh, how dare you play options, and blah, 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 blah. Just an absolute fucking emotional outburst from people who are clearly uneducated. So let's get into the video. Let's take a walk down memory lane real quick. About 7 months ago, the Wyckoff sniper, the one and only tried and true indicator by yours truly, was released / debuted, and immediately after I had it up and running and had debugged it, it was showing signs of some bullish potential. And if we go back to when that was, it was late March of this year, and the video was made March 25th, I believe. Yeah, no, 27th is when it would have gone up, I think. I'll go back and look. But it was on a Sunday, and I said, I think we're going to have a great week. And sure as flies on shit, we did. Going up 73%. Yeah, not bad. That was a good time if you had calls. And then clearly, there was a top that happened both on AMC and GameStop, and it went down. So here I am 7 months later, and I think we have another setup happening. I know a lot of people are going to get angry. This is not MOAS. This is not some market-breaking catastrophic event. This is literally just a form of cyclic movement that happens in capital markets where particular institutions or market participants have captured their alpha by holding a short position over a particular equity or equities via a basket. And the fucking chickens have come home to roost, and now they have to collect the profit, the alpha, the inefficiency of markets by collecting said profit, which means buying back some form of stock or derivative, in which case you'll see a sudden surge of purchasing power on the tape, pushing the stock price up. And I believe that's what's happening again, sometime over the next 1 to 2 weeks. I don't know why I had to be so condescending with that. And like, let's even give a more vanilla approach. This is one of the cleanest accumulation schematics I think I've ever seen. Even just going to the 4-hour. This particular action of motherfucking where did this go? I need, yes, this. Just this. This is a classic spring. Now, of course, that is if the path that we just drew out happens, but in which case would be a very, 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 very clean instance of a form of accumulation. And just overall, if we look at the trend, if we look at where everything is, if we reference a year and a half, even 2 years back, these are levels that haven't been seen in a very long time. And anybody who was clever enough and had the acuity to short here, 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 and here, might be time to take your profit, bud. Or if the board of the company continues to be absolutely fucking inept, you could go for more. But even then, there is some relief that has to be seen of some sort. Furthermore, if we consider the beta, please don't fucking put or append the word negative in front of the word beta. That's not what I am inferring here. Or no, not inferring, but implying. If we look at the beta, or the correlation, in other words, how a particular stock measures against a benchmark, there's an indicator that I put together. I believe it's public. If it is, you can search it by Cronorium RSI benchmark heat map. If we consider, sorry, I know this is like really fucking all over the place and it's really hard to see what's going on, so bear with me. We look at how AMC performs against the broader market. The benchmark we're using is SPY, the S&P 500. The darker the red, the more intense the red, the worse, or the worst, I'm too tired for English, that the SPY is doing. And so what we can do is we can compare that to how AMC does. And if we see AMC suffering as the red begins to intensify, that implies that we have a very significant positive beta, right? Which means they're positively correlated, which means that they're moving together. So if SPY is going down, that means that AMC is going down. If it was negatively correlated, it would be the opposite. And as we can see, a lot of the downward movement on AMC, going all the way back to basically July of last year, is also accompanied by SPY not doing too well, aka the broader market. So with that in mind, we can make the assumption that if the broader markets begin to do well, then AMC will also probably do well. And based on the nature of just the particular climate of how markets are working right now, where everything is very tied together, basically every stock is in some index of some sort. That's been a fact for a while. But more importantly, the fear and the greed index, if you will, of people's heads and the way that markets work together is ever so tied together more than ever. Basically, anytime there's any potential headline that could cause some sell-off, everyone or everything or every algo, whatever thing in the sky you want to attribute this to, is ready to go risk off and therefore start to sell and jump into fixed income, aka bonds. So considering that we are beginning to see some relief throughout the broader markets, we can also assume that AMC is very correlated with the broader markets. That would mean that if the broader markets are going up, that means AMC is going to go up. But also we have to consider that we're at levels that would be ideal for anyone that is short to either take profit or exit any potential risk, because that's what happens during bear market rallies. Speaking of, let's just take a look at SPY real quick just to give some context here as to what I am talking about. It appears that we are going into another bear market rally. If you don't follow me on Twitter, you should, at @ThatGuyAstro. I've been talking extensively about bear market rallies, some of the nuanced bits and pieces of how they work, how to expect them, how to manage them. But all in all, it seems that we're going into another instance of one, with the SPY doing some crazy shit over the past couple days. Futures currently are up almost 1%. And climbing, and it looks like it's going to be a very green day tomorrow. Fingers crossed. So let's go back to AMC real quick. Jimbo will be right up after this. I mentioned the Wyckoff sniper as like the preamble to this whole thing, and I want to go back to that. Currently, fucking, I got cat hair in my throat, I think. Currently, the accumulation bands are pulling up, which is a significant sign of support. That's not only a sign of support level-wise, but it's a sign of momentum. And the further up that those accumulation bands are pointing, the more momentum is behind that support. The more likelihood of a bounce, but also the intensity of the bounce goes up. Not only on the 4-hour, not only on the 8-hour, but even the daily. We're starting to see that curl up. And this is very significant. And along with that, we actually have AMC breaking out of accumulation on the daily. And the last time this happened, we had the move in March, right? I'm gonna, there we go. Actually, I just want price range. And this was just by the way, the one in March was just one accumulation band that this thing had bounced out of. The fact that we have 3 stacking up is ostensibly considerable. Just add some big words for exaggeration. So this was 170% gain. We then kind of bounced in and out and oscillated through this channel down here, but eventually breaking out of it. And this resulted in well, just here alone was 60%. And then following was 53%. And then following that was 95%. And even back here, though it looks minor, was 37% over a handful of sessions. Right. Going back even more, we actually have another right here, 44%. We have another right here, 31%. And if we open up the archives, going all the way back to the beginning, the original January squeeze, not to say that, it's not that the triple cluster caused it, but the triple cluster did pick up on it. The January squeeze happened to have a triple cluster of accumulation. And then going back to the June run, we had bounced out of accumulation as well, and this was 700%. So now here we are, and we're not even accounting for distribution yet. The nearest distribution level on the daily is sitting at 1186, and then 1308, and then 1807. So we have a double cluster, almost a triple, but what I would imagine could be something like this, and then maybe touching down at 494, right? Obviously not ideal by any means, but if you capture that movement in the meantime, calling it approximately 50%, if you know how to time your calls, it could be pretty nice. And if you think that options are the devil's financial instrument, then you could sell covered calls. It doesn't hurt the stock. So that's option one. Or we could outright blow past that. I would imagine there'd be a little pit stop for reaccumulation. But there could also be potential for this move of 91%. And then there's the potential for this move. And that would put us up at the first distribution level. And that would be approximately 118%, 116. Right? So there's a lot of potentials here. Then obviously you would probably reaccumulate some form of way, and what happens next, I don't know. But for the time being, where we currently sit in terms of what the sniper sees is very considerable. And the last time, just about every time that you can look back on this chart, there has been a move of anywhere from 40% to 700%. If you want to consolidate that range a little bit, 40% to 200%. If you can time your calls, take a couple hours, read up on it, understand how Vega works and Delta and whatnot, you can make a pretty penny, a very pretty penny. This is looking really good. Even going to the 1 hour, we're now entering into distribution. While normally, whenever we enter distribution on the 1 hour, we get slapped the fuck off of it. All right. So this is looking very, very good. And I myself have gone long calls. This is not financial advice. Blah 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 blah. You get the point. Do as you will. The beautiful thing about markets is that no matter what you say or what you feel or what fucking it doesn't matter. Whatever the price does is what happens, and that's fact. It's a beautiful thing. Your feelings don't fucking matter. So I myself have put my money where my mouth is, and I think that some cool things are going to happen. Even on the 4-hour, we're getting buy signals from volume alone, which has been a new indicator that was made, which I think is public. Cronorium, volume-based regime changes. This is throwing up buy signals on the 4-hour, which means that the volume that we're seeing on the 4-hour is way outside of the typical range and standard deviations of volume typically seen on the 4-hour. So in the meantime, Jimbo's in the same boat. And Jimbo has bounced off of the daily numerous times here and is very close to distribution. And anytime he has entered into distribution, it's pretty fucking nasty. So this is also looking good. I mean, just throughout here, we're capturing 15% moves within 2 to 3 sessions, sometimes even just in one. I think the weekly had something. No, it did not. Never mind. So Jimbo's looking very, very good. Again, we have buy signals being thrown out left and right. This is looking fantastic. In the meanwhile, futures look to be gapping up, and then by the time pre-market opens, I think this is the, oh no, this is the wrong chart. Doesn't matter though. Based on the current trends of the chart of futures, and then where our incoming resistance being distribution comes into play. Our first resistance, where those two will meet, where resistance of distribution, it's gonna be really hard to see, but this intersection of trend and current price lands us at pre-market. All right, so when pre-market opens, and my thinking is that futures will cool off, settle down, and equities will gap up. That's pretty much to be expected because futures are trading higher than where equities closed. But equities will accumulate / reaccumulate, and then going into open, we will distribute, and that should cause some very rapid upward price movement. So anyway, that's it. Stay black. I'm going the fuck to bed.